Hi, this is Kim Watson. Welcome to this week's Big Picture. It never fails to surprise me how many people totally ignore the fundamentals, and time again it comes up and, well, it bites. And I'm saying that, and this is the week that the fundamentals are all probably aligned in some respects, and it will probably have a bit of reversal, but we'll see. So let's have a look at the US situation first. And well, I can't give you the sentiment yet. We're still probably 2 weeks behind catching up with the asset and hedge fund sentiment. So there's no point looking at what was, because we need to be trading closer to the current time frame. And these are, in fact, at the point of looking at the current situation that or the nearest update, which was early January, it was showing a buying of the euro at that stage. But whether that will be still the case, we'll see. It may be seen as being the time to buy now. But for now, let's have a look at the overall goings on here. And as I say, US wise, they've settled down in terms of interest rates. That's all out there now. It's not likely to be anything done soon, and it's all steady. However, the numbers are still coming through pretty well, and so this week would be quite a key week again. We've got inflation this week. We've got quite a few speakers coming. Speakers, mainly Fed speakers. They're more as much as likely to say the total party line. There may be some variations there, but pretty much party line is that there is growth there. There are other factors which I haven't put in there, the Trump stroke, the trade discussions, particularly with China. They seem to be coming along pretty well, apparently, depending on what you believe. But it does look like it could be quite positive for all parties. So that may help growth pick up maybe in the later quarters of this year. I think some of the effect of that is certainly had its effect, or having its effect worldwide, and it could be quite slow. But if we carry on looking at a dollar here, and what else is going on, well, I'll show you the chart in a minute, but both the weekly and daily trend are up as well. So there's this overall bullishness with the US dollar. Now, obviously, when we look at the individual pairs in a short while, there's some key support and resistance levels we'll be looking at, but all the same, at the moment the dollar does look like it's probably the strongest of them all, with the slowdown that we're seeing through there. Looking at the euro dollar then, we've already seen the sort of the climb down, the effect that there's more likely to be more help rather than anything else coming from the central bank. The data's been, I shouldn't really put it onto this element, but the data's been sort of downward, and this week we got the German GDP, which will be probably more significant than anything else. But the European GDP, now if this GDP figure is falling, well, it could tie along with the downward trend that's sitting there. Now, always, as I said a moment, when something's being sold off as it is at the moment, there is a chance that we may get some strong bounces, but at the moment it's I'm a bit like a record, the euro dollar. I'm bearish on it, I've been bearish on it, and it's continued to run south. We'll look at the charts in a minute. Looking at the pound, of course, it's Brexit dependent. The governor suggests that there'll be a GDP increase if a deal's made of around about 0.5. He really does expect something to significantly turn around there, which is possible. Whether that's the percentage of GDP that's been put down to Brexit at the moment as opposed to the slower growth. I think more logical people have noticed the slow growth and the slowdown in growth elsewhere, and they're taking the cue from that as opposed to blaming everything on Brexit. But there we are. So far as this week's coming at the moment, we know, well, sorry, going back to here, there is that potential down possibility from the central bank's pessimism, if only I could say that. And then we've already had a missed GDP figure this morning, which has softened, but we saw a bit of a bounce, but then it's sold off since then. We've got Carney speaking later in this week, and we've got inflation coming out later this week, and retail sales. So quite a busy week for the pound. Where's it at the moment? Well, it's still in a sort of a bit of an in-betweeny sort of on a weekly basis, but certainly down otherwise. Unless there's something positive coming out, it will probably be easier to sell into the rallies. Dollar yen, we've got prelim GDP later in the week. I'm a little bit always watching the yen because it does tend to get bought a little bit when people really get quite nervous. At the moment, it seems like the dollar's been getting bought more than anything else, and that seems to be the way it is at the moment. There is this sort of iffy bit between the yen here, whether it's in a downward trend and an upward trend, a downward trend on a weekly basis, upward trend here. So it's a bit bitty because of that fat finger exercise, but there's probably erring on a bit of upward trend either way here. So all in all, there's nothing from a fundamental point of view that's positive here, but as I say, it's the one to be aware of if things start getting, money goes back out of risk into safety. Okay, so Aussie dollar, we've already seen an exchange and heard that may be a reduction. So overall, this is a bearish sentiment from that perspective. We've got the RBA Assistant Governor Kent speaking this week on the 14th, and at the moment the euro's running the Aussie dollar's running south there. So it's all pretty much aligned at the moment to the downside. It all fits. Canadian dollar, well, I was a bit surprised. Jobs figures came out. I expected some more strength, and I expected more to the downside last week with the US CAD. It didn't happen immediately. It may still happen, but it really depends on some numbers here coming through. But there is that potential. There's a slightly more positive view from the central bank, still the holding there. So it really depends on the numbers. The jobs did the trick and pushed upwards last week. Let's see what manufacturing does this week. New Zealand dollar, it looks like it's done for at the moment, but come 13th we've got the central bank talking, so this week it might be one best missed. And finally, if I can scroll this up here a little bit, there we go. We got the S&Ps. I'm just looking at them in the bottom here. Still got earnings coming out. It's been quite I've still got this sort of semi-negative on the weekly, but it's been quite positive. Although we're up at some key resistance. I'll come on to that in a moment. So let's run through the currencies as they are, and we start off. Well, I'm looking at dollar index actually. It's well, some people will be looking at this and say there's a nice Gartley appearing there on the dailies, and they'd be quite right, it is. But whether this fails from here, we'll see. From a weekly point of view, solid bullish pivot swing there on the weeklies there. It's pushing up from that at the moment. Could have further upside back towards that sort of 97.50, maybe even more. For sure, the economic data is stronger than its peers at the moment. Okay, euro dollar. Weekly picture, it's finally broken this sort of trend line properly this time. It's closed below that trend line last week. It's pushing south at the moment and looking weak. When we come down to the dailies here, well, there's probably plenty of areas where it may get some buying support coming in. In fact, I'm looking at retail traders at this stage, depending on who you look at. 74% on IG, bullish. Would you believe on? Well, you probably would believe, but on my FX book, a massive 92% are bullish. So there's possibly, with all those people that are so bullish, it may be more of a squeeze yet on those bullish traders. So we'll see how it goes. But at some point, as we've said in our trading room, we say, and this is why I'm a little bit wary when we start getting through to these sort of more significant lows, is that we could see some sort of retracement. It may be quite quick and sharp, just to push the shorts out for a little while, and then we may continue in this downward trend that's sitting there. But for now, I mostly remain bearish, but with a bit of common sense. Okay, the pound on a weekly basis. So it's bearish Harami the week before last week's continuation. We're seeing really a bit more of a continuation from there. May find some support coming down at the 128 area maybe. Looks like, or just shy of that actually, just above that actually. 128.34 may find a bit of support, but what's it doing on a daily basis? Well, it's looking bearish, and so this morning in the weekly, morning outlook here, it looks a bit bearish. I didn't expect it to be quite this bearish, but of course once it starts rolling, it pushes through. Now where to? It may get some support off that the 28.10 area I'm looking at here, so other areas of support. It's a bit of an iffy one, because anything that's agreed in Parliament this week, or if there was such thing as an agreement, could see this tearing ahead and pushing upwards. Fundamentally, I know the GDP came in a bit short, but it's not looking too bad, he says. Dollar yen. Yeah, it's anyway. Dollar yen, let's have a look where we are from the weekly point of view. So edging its way to continue upside. I should really call this an upward trend. It's running into sort of key moving averages, the weekly 50, we've got the weekly 21, weekly 100 that's sitting up there, may be the next point of resistance, but from a daily perspective certainly edging up. Higher lows confirmed. It was looking last week, I was talking about this in the morning outlook each day, and looking at the potential for this to be broken. Well, finally it's been broken, and as suspected, it's probably done double today than what it did the whole of last week with all its chop. So solid. Whether it can break that 50 now and push up towards the 200 is another matter, but it could well go that way at this stage. Aussie dollar. Weekly point of view first, looking at this, bearish. It's come out with the next interest rate decision may be to the downside or a reduction, and this has made it all look even more softer. Weekly pivot swing, bearish pivot swing sitting there, pushing off south, may have some more downside there. Just looking, as I can't see anything positive about this move at the moment, apart from it's just really gaining probably some momentum. I'm just looking at the MACD here, just confirming really what I can see from the picture on the top there. Let's get rid of that. Okay, Aussie dollar, and finally the Canadian dollar here. Not quite finally, he says. What we're looking at here, let's have a look. Weekly picture, and well, Canadian dollar is a bit stuffed at the moment. This is one, as I said, could be stronger, but as I keep on saying each week as well, it's still running in this higher lows, higher highs situation. It needs to start breaking through this area down at the 130.84 to be a bit more bullish, but so got some work to do there. Short term here, well, it's still hasn't put a higher low in at the moment, and it could still fall off here. I think data later in the week may help that, but it may just help it to come back to some support in terms of the daily 8 there. I think just the very fact that there's so much buying in the US dollar, it just doesn't matter how good it may appear. At the moment the money's going to the dollar. Okay, finally New Zealand dollar and the currencies here. Weekly picture here is bearish pivot swing there, and well, it's where they've got the central bank meeting this week. As I said, I think it's quite dangerous in terms of trading it. It may be quite quiet, but it does look bearish if anything, and will be interesting to see if that's confirmed when from the minutes of the meeting and subsequent press conferences. Okay, that's New Zealand dollar. Let's just have a look at the S&Ps from a weekly picture. So S&Ps into the weekly 50 last week, and it came slightly short of the daily 200 there. Possibly in some measurements it possibly hit, but for mine here, oh sorry, I don't know why I've come back. Let's go to a chart with less on it. There we go, it's a bit cleaner. There we go. Come a bit shave short, but it looks like it could push up. Still got data information this week. I think if anything is agreed on trade with China, it could see even more positive reaction to that as well. So all in all, yes, it may run into some resistance, may get a bit of divergence around with another move up here. Certainly possible. Let's have a look at the RSI setting. Yeah, it's possible. Most likely, almost, it will get some divergence into that 200, but if it's got some gusto with it, it will break through that potentially. It has been through it a couple of times previously. Right, that's pretty much it. Nothing else to add. So all in all, looks like dollar strength is the theme at the moment. The softer markets the softer markets euro and Aussie dollar to quite some extent there. So we'll see how it goes. Obviously, markets are a little bit iffy, as like the Canadian dollar, it could switch around because of the strength that's potentially there. The pound seems to be in the market's darling. I'm looking at the retail traders on that at 64% long. It may just see it push back down a little bit further, squeeze some of those longs out. We'll see. But that may be, as I say, it's a bit of a bigger trader's darling, and it's seen some decent runs to the upside at certain points. Okay, have a great week. Bye for now.